Greetings of the day. Very happy to announce that today's cost accounting paper was quite easy. Why? Because 80% of the questions can be easily answered as they are directly there in our material. So this shows the importance of our material, preparing for our material, because we prepare our material from different sources. Without wasting further time, let us go to the question so that you can understand the paper. Okay, so let us go to the MCQs first. So first one, which of the following classification is meant for distinction between direct cost and indirect cost? Answer is element wise classification. Which one of the following cost is the value of the best alternative course of action that was not chosen? Nothing but opportunity cost. Since it is not given, answer will be economic cost. You will find this MCQ to be difficult provided if you are not thorough with the MCQs that are given at the end of the institute material. Okay. Which one of the following is an example of byproduct? Edible oil and oil cakes. Okay. Batch costing. Okay. So what they have asked us to prepare, which of the following, what will be the minimum inventory holding cost? Inventory holding cost. So formula is half into batch size. Batch size is given here is 3000 into carrying cost. So carrying cost is given how much? 20 paisa per month, right? So 20 paisa, 0.20 into 24. So answer should come around to 3600 if I'm not wrong. Right. Which of the following are the characteristics of job costing? Customer driven production, complete production possible within a single accounting period. So answer 2 and 3, C. Okay. Now from this MCQ, they're asking us to calculate direct expenses. Simple thing, add all the three: royalty paid on sales, design charges paid for the product, high charges for equipment used for production. So answer will be 76,000. Which of the cost accounting standard deals with the principle and methods of determining repairs and maintenance costs? CS 12. Okay. Again, it's related to, if I'm not wrong, our cost bookkeeping. Okay, so costing loss is given as 2 lakhs. This is cost books information. Okay, so interest on investment received is given 10,000, which should be added because it appears in financial books. So financial profit will be high, costing profit will be low, so we have to add it. Okay, even though loss is given, we'll simply mention it as minus, but we'll treat it as a profit and we'll make the necessary adjustments. Right, as we paid, so financial profit will be low, costing profit will be high, so we have to subtract it as minus 30,000. So 40,000, right? Sorry, 40,000. So it will be 2,30,000 loss, right? MOS is given, profit is given, there are PV ratio is given. They're asking us to calculate sales. Formula MOS equal to profit by PV ratio. Okay, that is 30 lakhs divided by 25%, so we will get 75 lakhs. Okay, which is equal to 25%, right? So divide by 25%, you will get, so sales is MO is 25% of sales. I want to calculate sales. Okay, so it will be 300 lakhs. Okay, right. So again, this MCQ is from standard costing. So this is your AQ, this is your AP. Okay, this is your adverse price variance. So metal price variance is equal to standard price minus actual price into AQ, right? Standard price, we need to find out standard price. This one is minus 2000, which is given in the question. SP minus AP. AP is how much, my dear? 10. And AQ is how much? 4000. So answer will be 9.5 if I'm not wrong. Okay. Now they're asking us to calculate wages under row 1 plan. So this one will be your R, this one will be your AH, this is your SH. So AH into R plus R by, sorry, time saved, right? Time saved by SH into AH into R. So 40 into 45. Okay, plus time saved is how much, my dear? 8 divided by 48 into 40 into 45. It will come around to 2100. Okay, that is the answer for this one. Next, batch costing used in the drug manufacturing. Okay, next 13th one. If raw material prices are suffering from inflation, there is inflation, which of the following methods of valuing stock will give the lowest gross profit? Answer is LIFO method. Okay, because under LIFO method, what will happen? Raw material consumed will be, okay, high, and closing stock will be low. Because if prices are increasing, raw material consumed will be valued at 10 rupees and closing stock will be valued at 8 rupees. So closing stock is low, raw material consumed is high. Automatically gross profit will be low. Gross profit will be low. So answer is A. Fixed costs are treated as period cost. Budget that is prepared first of all is called as budget with key factor. So MCQs are quite easy. Apart from one or two, you will can easily answer remaining MCQs. Let us see section B. First problem is from cost sheet. It's a straightforward problem. There is no complication at all in that particular problem. And this problem is similar to the assignment problem in our material. Assignment problem 2 in our material. Okay, there is nothing to explain in this problem. Very, very basic problem. Okay, so I will skip on to the next problem. Next, my dear, this is from material cost chapter, from stock levels. Okay, so again, this problem is there in our material. It is CRD 10. Okay, so there are some missing values. The reorder level is missing of per R. So company is producing a product. For it, it is using 3 different raw materials. So information of these 3 raw materials is given. Weekly production is given 175, 225 and 200. That is minimum. Average, maximum is given. This is 175, this is 200, this is 225. Conversion rate is given 10, 4, 6. So P at the rate of 10 kgs, Q at the rate of 4 kgs and R at the rate of 6 kgs is given. Okay. So using this information, you can prepare a table. I can use the formulas and do the problem. So it's a basic problem. Okay. No complication at all. This is from overhead chapter, under absorption and over absorption. Again, this is from CRD 10. Straightforward problem. You have this problem in the material where you will subtract this abnormal cost. That is abnormal cost. What is that abnormal cost, my dear? Wages during the strike period will be subtracted, as well as expenses related to previous year will be subtracted from the 35.50 lakhs. Okay, and convert the work in progress into equivalent work in progress. So 20,000 into 65%, you will 20,000 into 65%, you will get equivalent work in progress units. 40% is because of factory inefficiency, charged to P&L account. Remaining will be charged to respective inventories. Okay, right. This is from cost bookkeeping. Okay, reconciliation problem where information from financial books is given and they have separately given us information from cost books also. Using this information, we have to prepare financial records and cost records. So it's a straightforward problem. It is there in our material. Assignment 9. Assignment 9. Okay, right. Next, service costing or operating costing. Okay, similar kind of problem is there in our material, that is CRD 5. Straightforward problem. A bus is operating in 3 different directions. Okay, new town to Sweet Village, new town to again new town to Rajpur and sightseeing. Okay, and it's a local sightseeing. So same problem is there. They have simply changed the numbers. There is nothing complication at all here. You can easily do the problem. Okay, next, B1. It's related to contract costing. As expected, we have a problem from contract costing without any fail. Okay, similar, exact same to CRD 6, even in the numbers. Okay, right. Next is from process costing. If you remember this, if you remember the classes, I have said several times that in process costing, if you focus on basic problem, you can easily answer it. So in this problem, there is no question of any opening and closing stock of work in progress. So it's a straightforward problem. There is no headache of any converting, calculating equivalent units. So it's a very straightforward problem. Process costing. If you are thorough with first 3 questions, you can easily answer it. Okay, there is no complication at all in this particular problem. Right, standard costing, again very basic. Okay, we have a problem in our material where standard output is not given. In such a case, what we will assume? We will assume that actual output is equal to standard output. And we will do the problem. So this will be 90. This will be 90. Okay, and process loss is 10. So standard input will be 100. So out of that, 40 will be your T and 60 will be your S, my dear. So you have all the information. You have SQ, you have SP, you have AQ, you have AP. You can calculate all the variances. Right? That is the thing here. Important problem, marginal costing. Entire information is given. Capacity of the plant is 1,50,000 units. But as of now, we are selling 1 lakh units only. So information of 1 lakh units is given. Okay. So cost of sales up to information and total cost information is given. Okay. And 4 different options are given. So the point here is that rather than like earlier attempts where they are focusing on limiting factor, here they are simply focusing everything on contribution. So you will simply calculate contribution for 3 alternatives or profits for 3 alternatives, and if the profit is more than the existing profit, then you will choose the proposal or you will reject the proposal. That is a simple thing. It is all based on decision making. You have several problems like this in management accounting also. But it's a very simple problem. They are not focusing on limiting factor or any other thing. They are simply giving you certain proposals. You have to calculate profit at the existing level as well as at the proposal, profit or contribution depending on situation. Then you have to decide if the contribution is more of the for the proposal or profit is more at the proposal, then we shall accept the proposal or we shall reject the proposal. That is it. 7A, nothing but budget and budgetary control. 80% capacity information is given, sales information. The tricky point here is that only admin, selling and distribution costs are given. Some costs are given as absolute numbers and some costs are given in percentages of sales. So if the costs which are given as percentage of sales are variable, remaining are fixed. So basing on that classification, we have to prepare budgets at 90%, 100% and 110%. Straightforward problem, no complication at all. Even at 110%, they have given fixed cost will remain unchanged. So it's quite easy for us. Whether it is correct or not is a different story, but it becomes quite easy for us. As expected, 7B will be from cost accounting standards. Rather than giving from first 3 questions, this time they have given CAS 5, that is cost of transportation. Next, last question is from section A, that is material, labor, overheads, introduction. Okay. So objectives of cost accounting system: fixing selling price, so determination of cost, cost control, cost reduction, fixing selling price, profit, all those things. Okay. Providing information to the management. Just in time is given, and they're asking us to enumerate or mention the disclosures related to CAS 3, that is nothing but overheads. The paper is quite easy. I hope you have done well. Thank you.